rolling. What's today's topic?
Tax planning.
Is it really? Oh, I love today's topic.
Hey everybody, welcome to another BizTalk show. My name is Kwa, my co-host Ryan Sylvester, and today's topic is actually tax planning.
Yeah, it's fun. It's fun. I don't know why you're making that face. You know, it's an underloved, situation.
It is underloved.
Yeah,
it's not the most entertaining topic over here.
It depends on who we ask, But what tax planning is all about, it's the analysis of your financial situation compared to the tax codes to make sure they both work as well together as possible to reduce your tax liability. So we're making you money. So by saving you money, we're making you money.
There you go. So, okay, so that excites me a little bit more.
Yeah. See, now it's fun, right? We're making you money.
Well,
all right.
We have our guest on the show, Victor Garrido. He's gonna be helping us with the
topic. It's very complicated.
Yeah,
very complicated. Like we can all change our own oil, but let's take it to a trained professional. We can all do our own taxes, but let's take it to a trained professional. It's a very complicated topic, and the codes are constantly changing. And who better to do that than a trained professional? Trust your CPA.
Welcome, Victor. Well, thank you for coming on board, and love to hear what you have to offer and what you have to say about what we should expect in 2021 in tax planning.
Okay, so that's exactly tax year 2020 closing, crazy year for all of us. So there are two things that are certain in life. One is death. Sooner or later, everyone will die, and that you pay taxes. So there's no escape about both of them. So, if you had a little time and you talk with your CPA, enroll agent, accountant before year end, maybe you did a little tax planning. If you didn't, maybe there's still time that they can run some adjustments. So it depends if we want to focus on individuals or businesses. So who do we want to talk or focus more our discussion on?
I'm gonna ask Ryan that one. What you want to focus on?
Yep. So I would like to focus mostly on the businesses. So this is the Chamber of Commerce, USPAC, and this is for anybody who this video is intended for anybody who's going to be able to extract value. But we're really targeting small businesses,
Okay.
and the small businesses, particularly in the Northeast.
So but it's kind of both though. It's business and individual.
Yeah.
Though,
so
right?
there's always an overlap.
Yeah.
There's always. So I can talk really briefly, right, on individuals, right? So what I talk to my individual clients, and it will be really brief, and then we can switch to business. But if you're an individual, right, you have stimulus checks. Did you get money from the government? Did you get maybe a check in mid-year 2020? You might have gotten another one in early 2021. Keep in mind that the IRS is changing their server and everything, and it's not letting you file until mid-February because they're making those changes, and they want to make sure, hey, did you get a check? Yes or no? Tell us. If you didn't, we will give you a bigger refund or a credit. So that's one of the big changes in 2021. You got the stimulus for individuals, even if you're a business owner, depending on your income. And then also we tell our clients to review their withholdings. If they have salary or similar or estimated tax payment, always to review it before year end, or otherwise send a check to the IRS before January 15. So that's a little off, but you can always catch up in April. For individuals too, keep track of your medical expenses, charitable contributions, anything else that is going on. You should keep track of that. And then have you contributed to your 401k? Some business owners, they can still do that. You have still a little more time, and that's like a tax deduction. So for individuals, that's kind of really quick. Check your prior year, check what it happened this year. Don't forget brokerage statement, don't forget interest income, don't forget the mortgage, don't forget all those tax documents. And then either you do it yourself or you have someone that is helping you, just provide that information. But it's going to be a really interesting year with all the changes and more changes that they will come.
And that's what I'm interested in. Yeah. What the big changes are for 2021, because the other stuff is standard, and the people that's been in business for a while now, or at least more than 3 years, at least has a better understanding, a little better understanding about the standards. But what does the PPP actually do to the tax I guess the tax
The impact on taxes,
impact on
Yeah.
taxes,
if I
exactly.
was a recipient of a PPP loan.
Yeah.
So that is an excellent question. So for a business point of view, right, and when I discuss is like PPP is not income, right? So until recently, really recently, the IRS said, okay, I give you PPP, that is a loan, then you can apply for forgiveness. People have been applying for forgiveness, right? And that money, if you apply for forgiveness, the IRS said initially, okay, you cannot deduct expenses. That was like IRS 2020-32, I think it was like the guidance. But in December 2020, they say, okay, the legislators changed it, and now you can deduct expenses. So it's like kind of capital as an equity contribution that you did to your business. So extremely important. If you got PPP loan and you're applying for forgiveness and you will get forgiveness, right? That's no longer a loan, and it will be like if you put in money to your business, and it's not income. A loan is not income. If someone lends you money, right? That's not income to your business. Don't pay taxes on that because it's not income. So that's really great. And has been a controversial item since the beginning of PPP. So since March to up to December, it was a controversial item. And also, if they got an SBA loan, that's not income for the business. Some people forget sometimes, oh, I got like money. Well, that money is a loan. You don't have to pay taxes on it. So just keep it as a liability, and be careful in some cases with LLCs and S corporations because of the basis if you pull out the money. So those are new items for 2020 that we never had before, PPP and SBA loans to business owners. And that's like, just be careful, don't pay more taxes than you should on those items. But that's an excellent question.
Yeah, I know for me, that I knew, and I knew that I was that we were to put the SBA loan into a loan bucket, which is only it doesn't reflect in my P&L, it reflects in your balance sheet, and then and I also put the PPP in a loan bucket that doesn't reflect my P&L. But I do know that I'm going to talk personal real quick, and then we'll go into, because I think other people are going to think about the same thing as I'm thinking about, is that we received a pretty sizable SBA loan, disaster loan, and the PPP was great just for our payroll and our mortgage and other expenses, some other expenses, but the SBA loan allowed us to pay off a lot of our debts, a lot of our like credit cards and anything that had high interest, right? That's what we used it for. The fortunate thing, or unfortunate thing, I don't know, I would say call it a fortunate thing, is that we did pretty good this year, meaning like we pivoted pretty well, we made income because of these loans, because of the PPP, really truly bailed us out. But now I made a profit at the end of the year.
That's a good problem to have. That's a great problem to have.
And now I'm going to be paying taxes on the profit that will actually go back to paying back the loan, right? Is that how it works? I mean, I don't. It's kind of in my opinion, in my head as a business owner, saying that, well, we want to be able to continue to thrive in our business, and now I'm asked to spend a lot of tax, take a lot of the profit I had, and put it back into paying back the loan when we're still building the business up. I mean, to me, it's kind of like it should. I don't know. I mean, are there any workarounds around that?
Counterintuitive a little bit.
Yeah, counterintuitive. Exactly my point. Yep.
Yeah. So you just have to keep in mind what the PPP program was for. Okay, and I will give you a background, like really quick. Probably already. So the reason for the PPP money, it was instead of having people getting unemployment, and before it was up to $600 a week plus whatever it was your state unemployment, they say, okay, let's keep the business open and let's keep like money to the employer, to the business owner, so they can pay their employees, and they cannot pay anyone more than $100,000, which it was like the $20,000 limit, right? So there were limitations. You cannot pay myself $500,000, right? So the reason is that way I'm not paying unemployment, right? And I'm having like the business open. So then any other SBA loans that they gave you just to look, it has been a pandemic, there had been like expenses that maybe you were not able to pay. There has been like liquidity constraints. So that was great. And now what is going to happen is on the PPP side, almost everyone that we know, they are getting forgiveness, right? So that money it was great. You covered your expenses like payroll, rent, like whatever. On the SBA loan, right? Unfortunately, you will have to pay it back in 30 years. But the interest rate is not bad. It's helping a lot of business just to stay open, or even like you say, like now you're doing better, than before. So that's excellent. Unfortunately, you will have to pay back that loan.
Yeah. So I had another question along the same lines.
I tried, guys. I tried, everybody.
So for those that unfortunately came under the victim of COVID-19, and had some health expenses, and a lot of times it's the employees of a company, and there might be additional expenses to the business, on the health insurance premium side. What tax implications does a business owner have from any new expenses that were incurred as a result of someone being sick on the health insurance side?
I think if you're paying insurance and like, I don't expect your insurance to have changed just because we were in a pandemic. If your insurance company increased your rates or something like that, it's a higher expense that you will have for the business. There are some credits for like people that got sick or stayed like at home, things like that. There have been like tax credits if some of your workforce got sick, and had to stay at home. So there's some help from the government on those expenses. Okay. But at the end of the day, there's going to be like an expense to your books and records, and then potentially if you can get that tax credit, but it's going to be limited. Okay. So it's going to be a deduction. So keeping the expense.
So the point is, make sure you have a conversation with your accountant to make sure you're aware of what those credits are, and if you don't have one, make sure you have that conversation with your accountant and find an accountant, as soon as possible.
There has been like, I highly recommend, because of the PPP SBA loan. So many times we see the structure of the business not done in the appropriate way. C corporations we don't recommend for small businesses. LLC might be a good way. S corporation might be a great way, especially if Biden changes on the Social Security cap, right? So we can talk even like what we expect for the future, but usually the structure is wrong. Business owners, they need to know that your books and records, right? When I talk with them on tax planning, if you don't even know your numbers and you come and talk to me in March, right? It's already too late. Talk to me in October, November, December, or send me an email. Hey, show me what your numbers are, and I can help you. We can maybe buy equipment. We can like get you a nice car, for your business, like whatever it is, right? Like you're complaining about taxes. So have a discussion before 2020 ends, or even during the year. Maybe you should be paying yourself a salary, or maybe you should change the entity structure. So there's like a lot of things and more tools that there will be, right? So now, did you pay retirement income? Did you set up a 401k? Did you set up an SEP? Right? Those are tax deductions, and then you have money for your retirement on the side. So those are like great. And I think people should take advantage of the 199, that is the 20% deduction, because I don't think if Biden will continue with it. So it's going to be really interesting because we have Biden, Democrat majority, right? That they just won in Georgia. So there might be tax changes. So taxes at the federal level, it changed with Trump in 2018, right? 2020 will be still and those changes, but maybe 2021, Biden is planning to change individuals taxation, change business owner business taxation, right? Increase the interest rates for some of the stuff, and this is something that it will impact us in 10 months. So if you want, we can talk about like some of these potential changes in the tax law that they are in Biden program. Nothing has passed, so we are just talking. We don't have a crystal ball, but I think it's something that people should know.
Yeah, I haven't followed any of the, shame on me,
Yep.
but I haven't followed any of these things that you've been talking about. Now,
And
are
that's the
these
value.
tax changes a good thing or a bad thing right now that they're talking about?
So as a CPA enroll agent, I will not say it's good or bad, right? Like last
Oh
time,
boy.
you know, I'm going to keep it really honest, right? With Trump, there was a decrease on rates for business owner, right? Like from 35% of C corporations went to 21, right? And then for LLCs, S corporation, there was the 199A that you could qualify or not based on your profession. So for a
Can you
business
explain what
point
that
of
means?
view, it was good. Sorry?
Can you explain what that means, the 199A?
199A is it's part of like the tax code that it was approved 2 years ago. You could get a 20% deduction on the net income of your business based on your salaries, based on like real estate. They were like different factors. It's a QBID, like it's just like a complex calculation. So talk to your accountant or whoever. If you're a business owner, you should have this conversation. But hopefully you could benefit for that, and you have benefited for like the last 2 years. So that's what happened before, and it was good, that change for business owners. For individuals, it depended. It depended on like because they changed the standard deductions and whatever. So with business owners, I think the Trump change was beneficial. For individuals, it was depending on like your income and so many things. Biden in the program has to increase rates, right? He mentioned only people making more than 400,000 will get like that tax increase. There might be an increase on Social Security cap that I saw right now is 137,000. So, you know, once you make more, you don't pay Social Security, and that might change, you know, because we need more money. As you know, there was 1.7 trillion that is on the table to be released. They will release almost 900 billion recently in December, right? So there has been a lot of money stimulus. So the government needs to make that money back. And then Biden also was thinking about changing the capital gain tax to the ordinary rates, a step-up basis for inheritance, eliminate some deductions for 401k. That's for individuals. And then for businesses, what Biden program had, but we don't know if that will pass or not, or they will continue, is increase from the 21% to 28. I think 28%. It was what he was considering, but I don't know if he will do it. Some more taxes on international corporations, have like an American tax credit. We will see what happens with the 20% deduction for a small business. I think like potentially we will keep it, and he wanted to keep it. But if you make more than 400,000, you will not. And there was even before phase out. So you know, you will see. I mean, right now they are talking about increasing the minimum salary, right? So all those are conversations that are interesting, and then you will have changes at the state level. You know, New Jersey was really smart at making some changes and having owners paying like New Jersey taxes and then getting like a tax deduction at the federal level. So there are like it's a really, really interesting time to be a CPA and enroll agent. So if you like to read, you could be reading every night a lot.
I find that extremely interesting as far from the these increases. I feel like I understand the increases. I understand why they need to increase it, but the question is, are they increasing it too soon? Because we're still in the pandemic, we're still in this rut. There's hundreds of thousands of businesses that closed out. There's tons of millions of jobs that are lost still. And then we're trying to recruit jobs, we're trying to build jobs, and we're in a whole new economy right at the moment, right? New world of emerging businesses, and I don't know that's a good idea.
I think that because of that point, it shows the value of having a good relationship with the CPA. Because what we heard Victor say a little while ago was more financial advisory tone than just let me do your taxes.
That's right.
You know, and if I understand what the rules are, I can better navigate through the rules and take advantage of the rules.
That's
right. You know, within the law. Is that a fair statement, Victor?
Yes, so it happened when anytime that they changed the tax law, and it happened 2 years ago, we got way more work, right? So suddenly there are new tax credit, there are new calculations, then you can run certain things, you know, you have new deductions. I think it doesn't matter if it's Republican or Democrat. Unfortunately, they spend way too much government money, like even at the state, right? Like they have businesses closed, so they lost a lot of revenue. Even local authorities, they lost a lot of revenue. So if they want to balance the budget, right, like and don't go into bankruptcy, there's no other option. So unfortunately, right, so otherwise they cannot provide those services that they provide. So I think it's an opportunity just to have a discussion with whoever you're working, as you said, to see, hey, what new opportunities are there? Maybe you were not doing it right and you didn't care because you didn't have to pay much taxes, but now that they increase tax rates, they increase they remove the social security cap if they do it, or they like change some of these items. Maybe having a discussion, will be a good way for that professional to add value. So at that point, it's easier for me or any other tax professional to add value, right? Because I'm going to save you way more than what my fee is. I think we are having a lot of discussions with clients and just seeing, and it's good for everyone just to reach out. We do like consult with people, like it's good to have a discussion and maybe look, we can work together, or look, you're in good hands. So
absolutely. I have a question, and this has been, I would ask CPAs these questions, and I always get different answers.
Okay.
And it's amazing what kind of different
no pressure.
So I'm interested in what you're gonna have to say. So I'm an LLC. I open these businesses up as LLCs, and they're passed through under my personal social security number and joint with my wife.
Yeah.
And they said, and then they said, why you're an LLC? You must be paying a lot of taxes. And then I would talk to my own CPA. Says, no, stay to LLC because it's easier to deal with the taxes.
We had this conversation. Yeah, I remember.
and there's people are telling me go to S Corp. Oh, why don't you turn it into C Corp? Blah blah blah. What is the answer here?
So I guess Victor, what questions should a business have to their accountant to make the right determination whether they should be an LLC or an S Corp or a C Corp or sole proprietorship, whatever it is?
So this is something that, for good or for bad, I talk about like every day with clients, and I have like seminars, and so there's no one answer. So I will tell you like really easy. I will make it really easy because this is something that I have to talk about the structures. If you are on an LLC or as 100% owner or just by yourself or whatever, the tax impact is the same. So whatever you make on your net income, you pay self-employment tax at 15%, right? Like when you have a W-2, if you make $1,000, right, you really receive 900, right? Because they pull the money out. But as a business owner, right, if I make $1,000 at the end of the year, or if you pay like estimated quarterly payments, they take that 15%. Up to a certain level. Once you make more than 137,000, they stop taking that 15%, which might be gone soon. I think Biden will change it. And I truly believe that's going to change. So what happened with an S corporation is the S corporation doesn't pay that 15%. So that might be saving you a lot of money, but the S corporation, the IRS says, okay, you don't pay that 15%. But it's because, you have employees or you pay yourself a reasonable salary for what you're doing. So if I have someone making $130,000, right, and I change to an S corporation, they might be saving a lot of money. That 15% that suddenly I create like a salary for $50,000 that might be reasonable, and the other $70,000 is not subject to that 15%, which I'm saving a lot of money, thousands and thousands of dollars. So it depends. Do I have employees? Do I pay myself a reasonable salary? Do I offset like my net income from one LLC to the net loss from another LLC? Do I want to be a C corporation? C corporation, I don't recommend it. There's double taxation, and C corporation is Apple, Nike, whatever it is. Only like 0.1% of my clients are on a C corporation, and they are like maybe people that they don't have social security numbers, IT numbers, like they use C corporations, maybe with like really high, potentially like legal liability. Sometimes they are in C corporations. So there's not like one way entity for you. And you could be an LLC today and you might change to an S corporation tomorrow or in 1 year or two. So it depends. Each has advantages and disadvantages. But I agree. And like I could tell you become an S corporation for this entity, but maybe if I see that you offset that net income with other entities, maybe there's no point. So whoever like knows all your entities, your like, you know, your tax situation, your investments and everything will give you hopefully good advice. What we have seen is that like, you know, CPAs, enroll agents, tax professionals, they're getting older and older. They don't want to like, you know, there have been like a lot of changes.
Yeah, just don't do anything. Just leave it the way it is.
Sometimes, and sometimes that might be the right answer. So sometimes, you know, like might be, but like in so many cases is not, right? And things have changed so much. I mean, in 30 years, like the IRS changed in 2018, right? And there might be another major change with Biden in, you know, this year, might be, you know, but it has been a really big change in 30 years. So hopefully you just do things in a different way, right? And now there are going to be more changes. PPP is one, the SBA loan is another one. So they are like in such a short period of time, right? There are changes that we haven't seen in decades. So
I have someone to recommend you, Victor, first of all. But so you got business already. The only problem is that he doesn't keep tabs of his books. So what do you do?
Yeah, so for those who
Yeah.
don't know me, I've been a consultant for maybe 12, 13 years now. And one of the biggest mistakes that I see is that people don't use the tools that they have in front of them correctly. They're not using their accountant the way the accountant should be used. They're almost treating them sometimes as a bookkeeper. You know, so I should have a bookkeeper on the side. Now, a lot of CPA firms do bookkeeping services, and that's fine, but those are two separate services. My accountant really should be my financial advisor. You know, it's my partner who's helping me make the smart decisions moving forward.
And
you know,
I think you got to keep reiterating that your account is not your bookkeeper.
And I keep saying, you know, just like, you know, Victor was saying a little while ago that, you know, he has to address the LLC versus S corp, you know, question a million times. You know, it's one of the things that I keep addressing a million times. You know, make sure you keep track of your books, make sure you keep track of your receipts, make sure, you know, you have all that stuff so that when you do have a conversation with your accountant, they have intelligent information to make intelligent decisions with. You know, I can't make a smart decision if I don't have smart information in front of me. And that's one of the biggest mistakes that I see. That it's an easy fix. You know, there's a lot of AI software out there now that kind of almost puts it on almost autopilot. There still has to be a human element that goes into it to make sure everything is being done correctly.
Sure.
But you know, there's a lot of systems out there that I can put things on somewhat autopilot. It depends on the complexity of the business. You know, obviously. But I think these are things that, you know, people are missing.
Well, I think that's good. Yeah. Oh, go ahead, Victor. I'm sorry.
So my 2 cents on the accounting, right? Like if you don't give me the balance sheet and profit and loss, I cannot know what your business made. I have no idea if you made money or not, right? So so many times if you give me a piece of paper with like, look, these were my sales for the year and they more or less match to your bank deposits, right? And these were my expenses, even on a piece of paper, I can play around with it. Like, right, I can discuss with you, hey, did you buy any trucks, right? Like depreciation, like, if you don't have a good bookkeeping system or like tracking system for what your numbers are, you cannot even take decisions on your business. So we, for so many clients, like some are accounting clients, some others, we just prepare the taxes, but they need to know more or less the numbers. And then you can do it like in a piece of paper on an Excel. You know, I have like clients that I send it like the template, right? And they contact me, an Excel really easy by month, January, February, okay, add your income, more or less the expenses, have your business bank account for like just your business, don't mix your personal and the business, otherwise you remove the legal protection. There are a few items. You don't need like the fanciest software out there. You can use it, but there's also like, should you do it at the beginning? Are you going to outsource that? Keep in mind that like if I see SBA loan as income and I don't catch it, then you're paying taxes. If you put like something marketing instead of like any other, like let's put like meals, right? It's 50% deduction, but maybe it was marketing. Maybe I bought a new car and I didn't put it through. So, you know, all those things add up. And if you get, hey, I forgot my internet expenses, I forgot my telephone, those at the end of the day, those are thousands of dollars at the end of the year, which it will be hundreds of thousands of dollars that you have been paying more on taxes. So we see a lot of times with the small businesses, they are okay at registering income, but they forget about expenses. And expenses are as important as income, because those are deductions. Look,
Yeah.
do you have a business meeting or not? Business travel, like your car, like how much do you use your car for your business? And people forget so many times, hey, like your car insurance, you're using your car for that. Even if you pay from your personal, run it through the business. So I think like that's what like people give any tax professional, CPA, enroll agent, that we see thousands of businesses every year, right? Like my partners. And we try to stay up to date on all the new PPP forgiveness. This second round, we have like hundreds of clients. So it's really important that like just to be aware. And if you are at that point that it makes sense for you to outsource it, and you're going to, either have more time to run your business, or it's going to give you more money, less taxes, right? You're going to pay significantly less taxes than what the fee is from this person, then go for it. I think things are extremely complicated for business owners right now. So if they provide good value, whoever you're working with, then it's good. Otherwise, we see a lot of people that they didn't apply to the second round of PPP. People didn't tell them grants that they are available, didn't tell for different industries. That you're losing a lot of money then.
Yeah, I mean, this is a good. That's actually a great closing, Victor, because, we had this, Ryan and I, we talked about what the topic was, and Ryan mentioned about 2020 and 2021. Well, beginning 2021. This is the first year of the entrepreneurship boom, right? A lot of new women businesses are booming, and a lot of new startups have just emerged. And I think I heard this same version of it, a different version of it, like countless times when I started the business, about having your books, making sure your balance sheet, blah blah blah, all your financials all in place. I think this is just another version of it, another reinforcement especially for these new businesses that's coming up.
Yep.
Right?
100%. So what Qual's referring to is that I read an article that said in 2020 there were more businesses that got registered than I think any time in the past decade or so. And it's just a response to people being underemployed or unemployed. They're still looking for ways to maintain their current lifestyles, so they start their own company. So we see a lot of them, and then a good chunk of those were women, which was a nice little fun fact as well. But that tells me that if a lot of companies are being born now, the foundation has to be set, and a building can't be very strong if its foundation isn't very set, or very strong. And solid bookkeeping, I think, solid accounting, solid tax planning, I think is part of that foundation. A lot of times we focus on what we think is, the most important, which is the product and the sale. And although it's very important, we dismiss a lot of the other core structures that support that sale and that product because we spend too much time. There was one of my favorite quotes, I think, was by Calvin Klein, that they asked him in an interview if you could go back and talk to the first year self of Calvin Klein, what advice would you give yourself? And he said to spend more time on the business side of business than I did on the sales side of business. And I think that is one of the most powerful statements that I've heard that has stuck with me and resonated well, that I pass on to everybody else that I speak to.
Yeah, and I will have something, right? Like so many times women-owned minority business, they have like higher percentages of like opening, right? Like because so many times immigrants and so on, they open business more than other groups. The problem is, yes, we open way faster than anyone else, but we close it too. So the thing is, like, we're really proud of opening, and I like hear it all the time. And like on boards, like I'm on the Hispanic board and like Greater Philadelphia, like I collaborate in New Jersey. I have like on different boards. I'm always, we are so proud, we're like the minority that we open the most and whatever. Look, but we are not in business, right? Like anyone can open a business, register an LLC. It's really cheap, right? Like, even if you do it with a lawyer, it could be like from 300 to 700 or whatever. If you want like more complicated with operating agreements and so on. It's really cheap to be an entrepreneur, but just like, is that business going to generate, like 2-3 years? It's going to go over like whatever, $200,000-$300,000 of revenue is going to generate enough income, to that entrepreneur to have like a good lifestyle. Like, so it's not like so many times I hear it that, and the thing is like, okay, I agree. I will make the sale first than like the books. but don't forget about it, right? Like, don't forget about the books, don't forget about taxes. And it's not important how fast we open businesses. It's like, are those business successful? So that is what we do here. Like, are you truly going to open a business? Have you thought about it? Have you like, and sometimes, even if I have like these discussions with the startups and venture funds and things like that, it's, like, is that happening or not? And so I agree 100% with what you said. But I will say, hey, just stay in business and be successful. Just don't open entities for opening them.
Yep.
It's a marathon, guys.
Yep.
It's a marathon for when running a business.
Exactly. I have two more questions for you, if you guys don't mind.
Yeah.
Okay, good. So you mentioned a little while ago that there are some changes recently in New Jersey that might be following suit with other states nearby. Can you shine a little bit of light on that, and what does that mean?
That's a complex topic, but I'm glad you asked. So what happened is New Jersey, in 2020, they were trying to get approved this program that is called New Jersey BAIT. And what happens is, if I have an LLC or S corporation or like any pass-through entities, I can pay New Jersey taxes through my business. So let's suppose I owe $10,000 to New Jersey. So I have to register in a portal. I think like I wrote something on the blog, and you can find information online. So I could pay $10,000 through the company. So through my business account, I'm registered. I put like, I pay New Jersey that $10,000. And then my net income from my company reduces in $10,000, right? So when I file my taxes at the federal level, instead of making 100,000, I made 90,000 for federal, right? So I pay less taxes to the federal government. And the IRS, the Treasury, approved it, I think, in December, so less than a month ago. And that just passed, and New Jersey was working on it. And then potentially you will have to make an adjustment for New Jersey taxes. But that's an excellent news for business owners in New Jersey. And other states are going to, okay, if you approve that in New Jersey, I'm going to do the same program, right? And I'm going to do it in California, in New York. So the person like yourself pay like that part of taxes, and that is a deduction against your federal income. They are not allowing that deduction at the state level. So the state is really smart, right? Like, I allow it, like, but it had been blessed by the IRS, which it was kind of surprising, because it's, so that's something that it just happened at the end of December. We were talking with a lot of business owners just to take advantage of it, because that, if your tax rate is 30% or whatever it is, your tax rate, or 20%, if you pay that $10,000, you're saving, like, if it's 20%, $2,000. If it's 30%, it's $3,000. So, it's like easily a few hundreds of thousands of dollars. And if you're like paying even more, that will be more. So that is a really, really interesting for business owners in New Jersey. And it's going to happen in other states. So that's like something that we have been working with clients all over the US.
Good. The second question, we had a great stock year. I think one of the best years that I've ever witnessed, and a lot of us, this might tie back to the individual topic that we started off with, but a lot of businesses do have a portion of their business in investments as well. If I rode the wave of capital gains this year, but I didn't realize those gains, let's say, like my money's still in my 401k, and it just, my shares in Tesla just went through the roof, and my 401k doubled. Am I liable for taxes? Or how are the capital gains structured tax? How is the structure for capital gains being treated now? Because you mentioned something about that a little while ago as well.
Yeah, so we have this discussion, and I have been having this discussion with a lot of clients, right? So let's explain first what is the capital gain, right? So the capital gains generate when I buy a security for $100, for example. Back in March, the market went down, and I bought it $100 of SP 500. So then the SP 500 went up 30%. So I have 130 right now. If I sell, right? If I don't sell, there's nothing. US doesn't charge you on unrealized to individuals. So, if I don't sell, just like now it's 130, I don't know what it will be in the future, but there's no taxable event, nothing happened. But if I sell that security, then I realize, and if I sell it for 130, then I made $30. And then that is the capital gain. And the capital gain also depends on how long did I hold the security for. If I hold it less than a year, then I have to pay my ordinary tax bracket. If I hold it like for more than a year, right, at the individual level, then it will be like capital gain tax, like 0, 15, 20, whatever it is, right? So it will be different rates if you hold it more or less. If I have it on an IRA, 401k, or whatever it is, that is not you selling it. It's just the 401k or whatever. That's nothing happens there, because it's when you will pull out the money when you will be paying taxes, right? So one thing is you as a person like making trades and buying and selling, and then you will get at the end of the year, what is going to happen is you will get a 1099-B that is brokered transactions from your broker, whatever it is, Robinhood, E-Trade, Morgan Stanley, whoever it is that you trade with. And it will tell you, hey, these are your dividends, these are your interests, these are your capital gains, or your capital losses, right? So it will offset each other, and it will have a breakdown what it was short-term and long-term. And that are like really, really interesting to discuss with clients also for financial planning and what they are going to do. So that's something that we are having right now, even like before year end.
Well,
so
that's great. Yeah,
so
that's
again,
great info right there.
I think the theme, make sure you have that conversation with a good CPA.
Yeah, you know what? Man, we could be here for hours.
Yeah.
We could be here for hours. I have so many questions I have to hold back here, but
same
But thank you, Victor, for jumping on board and giving a brief education to our members over here at the USPAC. And for any members that want to have more information about tax, just reach out to us and we'll connect you to the right people.
Yep. Thanks for having me.
Thank you. Before we let you go, any general practice, any best practices for business owners out there who are trying to tax plan for the very first time?
I would say what you mentioned. I mean, what we have mentioned, like have your books in order, right? And get professional advice, especially with everything that is going on, and have a discussion, like exactly what we have right now, right? Like, did you get PPP? Did you get an SBA loan? Like, just have a discussion with whoever is helping you, because that person will know what you're looking for, what you want to do with your business, what stage you are in your business. And we are advisors. I mean, like for a lot of them, I mean, sometimes they even tell us way too much information, but that's fine. That's welcome, because I know what you're searching for and I can help you to get there.
Fantastic.
I
definitely appreciate your invitation. I appreciate you coming with a short notice invitation. So definitely, thank you.
Thank you.
And I guess, how do you want to finish off?
Well, I think we could finish off saying, so Ryan, what do you want to be the next topic that we should be covering?
Oh, actually, yeah, I think that's a good question also to parlay off of Victor. Mm-hmm. So for those people that we mentioned a little while ago, that we all started businesses, but a year later, most of those businesses aren't around anymore. So aside from having a tax planning conversation, what other areas should a business give mind to in order to have that good foundation? A conversation, I'm assuming, with an attorney about their intellectual property, or what other areas do you see that would create a good foundation for a business?
So from my point of view, I always say like an attorney is one person in your team that you want to have around, right? Like any legal documents, any like employment contracts or independent contractor, like set up the entity, have like some kind of agreement with the people you do business with, right? So any of your clients, we have engagement letters, like depending on your business, you want like maybe invoices, bill of sales, whatever it is, right? So an attorney is someone really useful. I talk with attorneys every day. I'm an attorney in Europe, and here I don't want to be an attorney in US, but like an attorney is a good friend to have. Yeah. Insurance, I will say insurance is also key to know your, general liability, workers' compensation, depending on your industry, right? Like if you have for example, construction, you should have a really good relationship. So lawyer, insurance, banker, have a great relationship and talk with the banker when you don't need the money. because when you need the money, it's way too late. So have a good relationship with your banker, merchant fees, rates, like any liquidity that you have, right? Like it could give you like some tips. And then yes, CPA, enroll agent, kind of sometimes we have the relationship, like those 4 people should be your best friends if you have a business. And then sometimes I always like to check with marketing people because sales are extremely important. So sometimes, just bounce idea or have like a marketing person to just elevate your business. If you don't make, you could have the best attorney, best CPA, best insurance guy, and if you don't have sales, there's like nothing to do. So those are like people that sales are extremely important. So I agree. I'm a business owner myself. I have different businesses. So if there's no sales, there's no business. So those are like some of the professionals that I use and I highly recommend to my clients. Or sometimes I try to give them ideas even on the other areas, but sometimes you need a professional.
Victor, thank you so much again for joining us.
Victor.
I appreciate it.
Well, Ryan, that was very entertaining. I definitely had an idea how to, navigate through my tax, and shame on me for not reaching out to my CPA. So if you haven't reached out to your CPA, reach out to them as soon as possible. It's never too late. And if you haven't reached out to us, try to make sure you reach out to us at uspaacc.com, uspaacc-ne.com. You can also reach out to us through social media. Subscribe to us on YouTube, like us on Facebook, engage with us as much as you can. We're going to be putting out a podcast of this type of version, and you can check it out on Apple Podcasts, Google Podcasts, and it's all going to be on the website as well. Anything else?
Yeah, if you're not already a member of the USPAACC Northeast, please join. There's a lot of benefits, and a lot of things that we have coming down the pipeline in this year, 2021, that will more than pay for your membership fees. So there's a lot of benefits to becoming a member of USPAACC.
That's right. I should be talking about that a little bit more. The registration for USPAACC is extremely simple. You go to the uspaacc-ne.com, click on the register, and sign up, and you become an automatic member right away. The promo code is inside the description. It's no fee to become a member with us, and you're gonna get all the benefits as we put out all the content for you. You're gonna get a special login to go into your into your account, and we'll be able to post all updates, and we have a lot of candies and toys for everybody.
So that no fee, that stays there forever?
Nope.
No?
Only for 1 year.
Oh, for 1 year. So if the people who join the next 12 months join for free?
That's right.
Wow, I didn't know that.
And you can be part of our hybrid event. So join and be a part of USPAACC. So with that, see you next time.